Is a rental property a good investment in 2024? Here's what you'll need to know. Real estate investment trusts are an easier path to producing passive income. The real estate investment market has seen a significant fluctuations in the recent years, and 2024 was no different. From historically low interest rates to soaring rents and substantial appreciation gains, followed by raising interest rates, inflation, and recession speculation. It's been a roller coaster ride. If you're feeling overwhelmed, you're not alone. But let's get to the heart of the matter. Is rental property still a viable investment in 2024? Many individuals venture into rental property ownership to begin earning passive income. It can indeed be an effective method, with rental income often covering expenses and providing extra returns. However, rental properties come with their own challenges. What are the factors influencing the decision to rent a house? Several factors influence the decision to rent a house, including economic conditions, external housing factors, location, management, rent risk, mobility needs, and financial limitations. Economic factors like housing expenses notably affect residential satisfactions and the choice to rent a house. What are the potential rewards in the real estate market in 2024? In the United States, where there isn't just one housing market, rather, there are numerous housing markets within each area. What may be a smart purchase in Las Vegas might not hold the same value in other states. Some cities experience steady demand, while others undergo fluctuations influenced by supply and demand dynamics. Therefore, is it wise to invest in a property in 2024? The answer hinges on your individual circumstances and the specific properties you're evaluating. Nevertheless, here are 6 potential benefits or pros of diving into the real estate market in 2024. The first one is renting out properties can help safeguard your finances against inflation. As inflation rates climb, so do rental prices. Real estate investments are commonly referred to as hedged against inflations. This is because with a fixed rate mortgage, your interest payment remains constant, while your rental income has the potential to rise gradually. Moreover, as you continue to rent out the property, you'll be accumulating equity, which can further shield you from inflation and potentially benefit from long-term appreciation. For instance, let's say you own a rental property with a fixed rate mortgage and a payment of $1,000 per month. If inflation causes rental prices in your area to increase by 5% annually, your rental income could potentially grow to $1,050 per month after 1 year, providing you an additional $50 to offset inflation. The second tip will be, property values tend to bounce back and rise after economic downturns. In recent years, housing prices have soared, showing significant double digits increases in most areas. However, there's always the looming risk of an economic slump that could swiftly alter this trend. Fortunately, history shows that property values tend to recover and rise again following economic downturns. This implies that if you're in it for the long haul, you can anticipate the value of your property to appreciate gradually over time, despite the possibility of a short-term decline. Single-family homes offer a steadier investment compared to the stock market. Based on data from Roofstock, the average yearly return on single-family rental homes are similar to those of the stock market and even surpass bond returns. What's more, they come with significantly less fluctuation. Roofstock also notes that there's no direct connection between single-family homes and the stock market, making real estate a valuable option for diversifying an investment portfolio. Similar to the stock market investments, successful real estate ventures require careful planning and knowledge to maximize profits. The fourth tip, Rental demand is on the rise due to low affordability in the housing market. Despite some area experiencing a slowdown in house prices in 2023, many Americans still find home ownerships financially out of reach. CNBC highlighted this issue and mentioned that several research firms forecast continued price increases in 2024. The primary reason for this trend is the insufficient supply of homes to meet the demand. As the need for housing remains constant and fewer Americans can afford to buy homes, investing in rental properties in desirable neighborhoods can prove lucrative. Such properties tend to attract long-term tenants, leading to low vacancy rates and stable rental income. Let's say you own a rental property in a neighborhood where housing prices are high, making home ownerships unattainable for many. In such a scenario, your rental property could attract tenants who prefer renting due to affordability constraints, ensuring a steady stream of income for you as the landlord. The fifth tip: owning a rental property comes with tax benefits and write-offs. One significant advantage of owning a rental property is the ability to deduct certain expenses on your tax return, as outlined by the IRS. These expenses may include mortgage interest, property taxes, and operating costs like property management fees, depreciation, and repairs. Additionally, you can also deduct expenses related to hiring an accountant or tax professional to help you maximize your tax claim. Tip number 6. Advancements in technology are simplifying rental property management like never before. Traditionally, managing a rental property involves two main options: either handling everything yourself, which can be quite demanding, or hiring a property manager, which may impose its own set of challenges. What are the potential risks in the real estate market in 2024? Now that we've covered the potential rewards, what are the risks of investing in a rental property in 2024? Again, this will vary depending on your personal situation and the locality where you want to invest. But here is the list of 6 risk factors that you should consider before buying a rental property this year. The first one is, not all real estate investments guarantee passive income. While owning rental properties has the potential for passive income, it's not always the case. If you're managing the property yourself and handling tenant matters, you'll likely spend considerable time communicating with tenants, arranging costly maintenance repairs, and searching for new tenants when other moves out. Numerous first-time landlords admit that managing rental properties feel like taking on an unexpected part-time job. It's crucial to thoroughly assess the time commitment required for property management and consider outsourcing tasks if necessary. The next one is limited inventory is making it harder to find attractive investment opportunities. In cities with high demand, the market often shifts in favor of sellers. If you already own a rental property, you're in a good position. However, if you're trying to enter the market, increased competition can put pressure on your rental income in the short term. Number 3, interest rates are expected to stay elevated. With house prices already on the higher side, an interest rate surpassing 7% can pose challenges in financing a rental property investment. Will there be any respite in 2024? Possibly, but not until the latter part of the year, as a report by CBS Money Watch. Similar to 2023, this implies that unless you possess substantial capital for sizable down payment, purchasing an investment property in 2024 will likely be more expensive compared to previous years. Number 4, rental growth has slowed and may decline in some areas. Locations in real estate is always important, but it becomes more so when vacancy rates rise or values drop. Choosing the wrong neighborhood in 2024 could create major challenges, including lower rental income and property values than other markets and a smaller pool of quality tenants to rent to. Number 5, maintenance costs are heavily inflated. Even if you own your rental, you won't be immune to rising costs. Home maintenance costs have hit an all-time high, with materials and labor being heavily impacted by inflation. Number 6, the threat of an economic downturn lingers in 2024. The question of whether the U.S. economy is heading towards a recession has been looming since 2022. While many economists have eased their concerns, there's still no clear answers for 2024 and beyond. If the U.S. does indeed experience an economic downturn, there will be a potential risk to both house prices and rental growth. However, as highlighted earlier, the fundamental need for shelter persists, and historically, property prices have shown resilience, often rebounding after downturns. This underscores the importance of thorough research when considering your first investment property and location, particularly focusing on markets that haven't experienced recent overpricing. Investing in a rental property is a decision that requires careful consideration. We doubt that many of you woke up this spring with the sudden urge to purchase a rental property. However, if property investment is on your mind this season, we're here to assist you on your journey. Whether you seek advice and guidance or practical assistance in finding suitable properties or portfolios, we're ready to support you every step of the way. Property investment in 2024 and becoming a landlord is a serious endeavor that demands thoughtful attention. Yet, it's important to recognize that it holds the potential for significant financial rewards, which is why many individuals pursue it. If you believe the property investment could be the right path for you, don't hesitate to reach out to us. Thank you for tuning in, and we wish you a wonderful spring season.